Imagine opening up your mailbox every month to find an unexpected check from Warren Buffett, one with the potential of yielding 15% annually and paid out monthly, providing approximately $1,250 monthly on an initial $100,000 investment. Today, I'll explore the VistaShares Target 15 Berkshire Select Income ETF, or OMA for short, which allows investors to leverage Buffett's genius while reaping monthly returns that exceed those found with traditional equity ETFs like JEP-E or JPQ. By the end of this video, you'll have an understanding of whether this Buffett-inspired dividend machine deserves to be in your portfolio or whether alternative investments, Berkshire Hathaway stock or income ETFs, would be better options. I provide both perspectives, exciting potential and possible risks that many might gloss over. When you invest in OMA, you're getting exposure to Warren Buffett's top picks, including Berkshire Hathaway, 9.68%, Apple, 7.90%, American Express, 7.74%, Bank of America, 5.38%, Kroger, 5.07%, Visa, 4.75%, VeriSign, 5.72%, Citigroup, 5.11%, Davida, 4.90%, and Moody's, 4.50%. These are companies Buffett believes in, picked for their consistent performance, strong fundamentals, and long-term potential. If you're serious about building passive income and want the latest on investments like this, hit that like button, subscribe, and set an alert bell so you don't miss any wealth-building opportunities. Let's get going. Disclaimer: the content provided on Bearish to Bullish is for educational and informational purposes only. Nothing in this video or on this channel constitutes personalized financial, investment, or tax advice. All investing involves risk, including the possible loss of principal. Past performance is not indicative of future results. Before making any financial decisions, you should consult with a qualified financial advisor, accountant, or other professional to discuss your individual circumstances. Warren Buffett is widely renowned as one of the greatest investors of all time. For over 6 decades, he has transformed Berkshire Hathaway from a failing textile business into a trillion-dollar conglomerate that consistently outpaces returns seen on the S&P 500 index. What is Buffett's secret to success as an investor? Buffett has made his fortune investing in top-quality companies like Apple, Coca-Cola, or American Express at reasonable prices and holding them for decades. Such businesses typically possess strong profits, loyal customers, and competitive advantages known as moats, as Buffett refers to them. Investors looking to replicate Buffett's success have attempted to do so through purchasing Berkshire Hathaway stock, BRK.B, giving them access to his carefully chosen portfolio. But there's one key difference with buying Berkshire. No dividend payments are offered by this firm. Instead, Buffett prefers reinvesting profits back into his businesses, which has generated long-term growth that's made shareholders rich. While growth investors might find this strategy appealing, if you need income immediately for retirement, bills, or reinvestment purposes, etc., Berkshire can't deliver. That's where OMA steps in. The VistaShares Target 15 Berkshire Select Income ETF goes beyond simply replicating Berkshire Hathaway. Its holdings are engineered to produce monthly income streams and offer exposure to Apple and other high-growth stocks handpicked by Buffett himself, but using sophisticated option strategies to generate steady cash flow. Think of OMA as Buffett's portfolio with its own dividend engine attached, designed to combine quality investments with immediate cash flow benefits. Let's unpack what makes OMA unique. First, its goal is to generate high monthly income with an impressive 15% annual yield distributed monthly. That equates to roughly 1.25% per month, so investing $100,000 could yield $1,250 monthly, enough for mortgage payments, retirement income, or reinvesting for growth. OMA's monthly payouts provide consistency and flexibility compared to traditional dividend stocks, which pay quarterly. OMA offers core equity exposure through a portfolio of approximately 20 large and mid-cap companies. These stable, profitable businesses align with Buffett's emphasis on quality and durability, not simply yield. You are investing in pieces of America's greatest companies. Professional options management drives income at OMA. A covered call strategy involves selling options on its stocks to collect premiums that fund dividends. Experienced managers handle it, relieving you of any hassle when trading options yourself. Who can benefit from OMA? For anyone nearing retirement or already retired, an OMA portfolio could provide invaluable monthly income, far outstripping its 7 to 9% yield in JEP-E. A retiree with $200,000 invested could generate $2,500 a month towards living expenses or travel. If your portfolio focuses heavily on growth stocks, OMA adds cash flow without compromising Buffett's focus on quality stocks. Furthermore, for Buffett admirers who wish Berkshire paid dividends, OMA feels like a dream come true. But keep this important point in mind. OMA shouldn't be your sole ETF option. With only 20 stocks, OMA ETF is relatively concentrated compared to S&P 500 ETFs, which hold 500 companies across all sectors. High concentration risks mean higher risks if any holdings falter. Consider pairing it with broad funds covering tech, healthcare, or international markets in order to mitigate your risk. Even Warren Buffett recommends low-cost index funds as an investment strategy for most investors to minimize risks. Now let's discuss trade-offs, as a 15% yield doesn't come for free. OMA's covered calls limit its upside when stocks surge quickly after launch of new iPhone models. For instance, if Apple stock rocketed 20% after an iPhone launch and you owned Apple directly, you would capture all that gain. With OMA, however, your upside could be limited to as much as 5% due to forced sales at preset prices by fund management. Also, during bull markets, it may lag behind Berkshire Hathaway stock or market growth due to limited upside potential compared to Berkshire Hathaway stock, or broad market performance compared with Berkshire Hathaway stock itself or market as whole. One important consideration is taxes. OMA's income is taxed as ordinary income, which for many investors could mean a tax rate as high as 24% or more. On a $10,000 distribution, that would leave you with $7,600 after taxes. By comparison, qualified dividends taxed at 15% would leave you with $8,500, an extra $900 in your pocket. That difference can add up over time, especially if you're relying on this income in a taxable account. For that reason, OMA is often better suited for tax-advantaged accounts like IRAs or 401ks. And the expense ratio at 0.95%, which is quite steep for an ETF. On $10,000 invested with this ETF, that adds up to an annual expense ratio of $95 in fees, as compared with JEP-E's 0.35%, $35, or an S&P 500 ETF's 0.03%, $3 fees. Over 10 years, this could cost many thousands in fees alone and reduce returns considerably. Berkshire Hathaway stock with no ongoing charges appears more palatable at first glance. You must ask yourself whether your income justifies its cost. Let's compare 4 ETFs side by side. OMA versus JEP-E versus JEP-Q versus BRK.B in terms of diversification. JEP-E tracks the S&P 500 with 500 stocks from tech, healthcare, and beyond, which helps spread risk widely. JEP-Q tracks the NASDAQ 100 with its concentration on tech giants like Microsoft and Amazon, while OMA's 20 stocks make it more concentrated but safer than investing in single stocks directly. Both are relatively safe than investing directly. OMA stands out for its dividend yield, boasting an attractive 15% target that easily beats both JEP-E, 7 to 9%, and JEP-Q, 8 to 11%. Making it the go-to choice for income seekers needing cash now. Berkshire Hathaway does not pay any dividends and so counts as zero in this comparison. On the other hand, its consistent yield through market ups and downs favors JEP-E and JEP-Q, while its 15% yield remains unproven in such volatile times. Other covered call ETFs could falter similarly in this comparison, thus it may or not apply. Fees. Berkshire Hathaway wins with no expense ratio as a stock, merely minimal trading costs. JEP-E and JEP-Q charge an expense ratio of 0.355% each, making them competitive among active funds. OMA charges an excessive 0.95%, nearly 3 times greater than what JEP-I charges for active funds. Total returns? Berkshire Hathaway leads overall in bull markets due to no call option caps that limit upside gains. Other funds have limited gains but may edge ahead due to having wider bases like JEP-I and JEP-Q's distributions, which trigger taxes upon sale, unlike ETFs' taxable distributions, with high-yielding funds like OMA creating tax burden? My verdict? OMA is an innovative strategy for replicating Buffett's no-dividend strategy in an income-focused portfolio, turning Buffett's no-dividend strategy into dividend-paying and income-distributing. Retirees, diversifiers, or Buffett fans who prioritize income could see their finances transformed with its 15% yield, funding expenses, or reinvestment opportunities. However, be wary of three issues when using OMA. It is new with no track record to substantiate its yield holdup under challenging markets. Secondly, the 0.95% fee is high when owning BRK.B without fees. Thirdly, taxes impact returns significantly when investing taxable accounts, reducing returns significantly. If you're intrigued, start small, no more than 5% of your portfolio in order to test OMA. Monitor its monthly payouts over 3 to 6 months in order to assess its 15% yield, and compare it against BRK.B, JEP-E, and other markets to gauge value. Keep it in an IRA or 401k plan in order to avoid taxes, and diversify by pairing OMA with S&P 500 ETFs or other funds in order to spread risk more evenly. Buffett has amassed immense wealth through his strategy of selecting long-lived businesses to invest in for growth, such as Apple. While its promise of monthly dividends may entice, high fees, tax issues, capped upside potential, and newness should be carefully considered before considering investment options like this one. A balanced approach may be best. For growth, look toward BRK.B, while income seekers could use either JEP-E or JEP-Q. If dividends from OMA excite you, then perhaps adding small positions into a diversified portfolio could work. Consult with a financial advisor or advisor on aligning it with your goals before considering any particular holding. How would a 15% yield impact your life, pay bills, fund travel, or speed up retirement? Share in the comments and subscribe for more insights. This video should only be seen as educational. Any projected performance does not guarantee future gains. Please conduct proper research and consult an advisor before investing. Thanks you for watching. Are you bearish or bullish on OMA?